Welcome all to this unconventional forex trading new webinar, which will be based on some specific topics that I have planned to and that I will introduce you in a minute. I had to decide to do this webinar based on the tons of mails that I received in the previous months, day by day. You know, some of you are asking me about my UFO expert advisors, other they're asking about mentoring, other they're asking about tips or tricks or suggestions, whatever. But there are main questions that I have to daily type and type again and give kind of meaning, which is very stressing and time consuming. So I decided to make this video with a kind of sense and flow, and trying to touch all the recurrent questions that I got. And this can be pretty obvious because if we are 1,000 people and we are facing one and the same problem, which is Forex, it's consequential that we can have some similar questions or same questions as when we will go to school, when we study math, whatever. Okay. This channel, Unconventional Forex Trading, is the approach to Forex that I mean, which is quite unconventional compared to other approaches that are pretty uniformed, that I had the opportunity to check and see that they don't work that much, at least for myself. And I have a different approach to Forex and to the market analysis that I think is more effective because it gives a reading of the whole currency market, and not only of a single chart or a bunch of charts, that they don't give this kind of information. So what you're about to see here is also what you have seen in the other videos that are on this channel, that I strongly invite you to watch, because here I'm going to cover some topics, but there are many other topics that I covered in the past and making some webinars. So if you're curious about this approach, maybe also this webinar of this video could give you a kind of reading key for all the other videos, and I hope so. So that maybe I receive only less questions via email and I have more time for myself. Okay, so let's start. And of course I put down some lines to follow, so this way I try to be more, at least focused on the thing that I have to say. And all the questions I told you I was receiving in my mails. Of course I thank you all for your interest and the comments that you leave here, and maybe some questions or via email, and a lot of you that are appreciating my work. So thank you very much for this and for this opportunity. So these questions of you, from you, and also from me sometimes, they're regarding these main topics. So the currency analysis, so how to fucking analyze this naked charts of currency pairs, figuring out the market performance for the day, which means translate the currency pairs charts, which are 28 for the environment that we define as Forex. There are of course many other currency pairs, and so therefore more currencies that we decide to exclude from the equation because of they're not very tradable, even if they are tradable, okay? But we focus on the ones that have more liquidity, less spreads, and so on. But anyway, from analyzing the charts, which have currency pairs. We analyze the market performance, which has currencies. And the best tool to use, of course, is my UUFO, Expert Advisor for MetaTrader, that I design based on math. And also I like to have another point of view in my analysis, because it's always important to have at least two analyses that converge to the same result, to give more probability to our decision and positions to be positive. And also I like to analyze, even because a lot of your mails were very curious about the Excel approach that I'm using, which basically is just a spreadsheet, come on, where you get some information from the charts, which are open, close, high, low. And you make some math with the values that are coming out from that combination of those elements. Then you arrive to a kind of graphication, and that graphication, that charting, regards currencies, not currency pairs anymore. On that chart, new charts, so the numbers that are in the UFO are then the charts and the evolution of the chart, because I make extra formulas with Excel. Is very easy to, and we will go into this in a minute. I will show you this, so bear with me. There are some technical and fundamental analysis that can come out from the analysis of the currencies. Technical, because we can see some decent and very clear level of support resistance of the currencies again, and see some trending or rejection to certain levels, so levels of price or of movement, so reversals. And also fundamental, and I want to be clear on this, because some questions are regarding fundamental analysis. I don't trade the news, and I think trading the news is wrong. But there are other news, because the news is something you don't know before, and in a minute you have the news, so now you know that. But there are also news, other news, that are more important and more fundamental, which are, what's the news about dollar? But you mean dollar cat? No, I mean dollar. Dollar is strength, is increasing in strength, or is decreasing in strength, or had a peak, so they are selling it, or had a low, so they're buying it. But you mean euro dollar? No, because euro dollar, it's a cross. Dollar is the currency. So technical and fundamental analysis means that when I do technical, I do analyze the trajectory of the currencies compared to the other currencies, and I can see support resistance, and I can see movements, and I can see correlations. And then I have the fundamental, which it seems that, oh, look, what time is it? It's the opening of a London session. Okay, and dollar had a peak down and euro had a peak up. So they're selling euro and then buying dollar. So euro dollar down, or vice versa, who knows? Or is the Asian session? But you have the news related to the environment you want to have information. Nobody will tell you if Brexit or an earthquake, which way can influence the trajectory of your currencies, pairs traded in the day. But for certain markets will tell you better than the news of whatever channel you want to watch. You can watch it, you can have an opinion also there, why not? But don't make that part of your fundamental analysis. Fundamental analysis comes anyway in my unconventional way to analyze the markets from an analysis of the markets, to see what is not to hear what is not told, but that we can assume. And I will show you this as well. Okay, so let's go in this first, what's my pen, in this first topic, in this first okay, this one. Okay, currency analysis. Well, so what do we have to do? What the UFO does? What my Excel files are telling me? They are synthesizing and making algorithmic work to help me not to do the same work but to have the same conclusions that I will do analyzing 28 charts, because we have 28 major currency pairs that we have to trade. Okay, and you know from the previous videos, but it's right that I do make a statement for those who are watching this video for the first time. We have euro, dollar, CAD, Swiss franc, GBP, Aussie, New Zealand dollar, and yen. Okay, these are 8 currencies. Combined together, they provide 28 currency pairs, which are these ones. That are obvious that we want to trade them because they have low spreads and they have high liquidity and volatility combined together, some of them. We can also trade, of course, Singapore dollar, Hong Kong dollar, and so on. But look at the spreads. And we can include them in our analysis, but when we do analyze these currencies, we analyze almost the entire market. So there can be spikes or things that we cannot understand because there are other currencies involved, but their impact, if it's sometimes combined, sometimes out of the harmony of these 8 currencies, but can be somehow reduced. Okay, and anyway, we are trading not these currencies. Okay, so we are staying strict to these 8 currencies. And for beginners, this is very important to see the market as a combination of these currencies, because we have to analyze them through the charts, which are euro and dollar combined. In this case, I am analyzing dollar. Okay, so dollar combined with euro, dollar combined with CAD, with Swiss franc, with Aussie, with New Zealand dollar, with yen, and with sterling, GBP. In this case, I am analyzing US dollar. And what I'm doing in this analysis of 7 charts, because there are 7 combinations: euro dollar, euro USD CAD, USD Swiss franc, GBP USD, Aussie US dollar, New Zealand dollar, US dollar, and USD yen. And this goes the same for euro, for CAD, for Swiss franc, for GBP, Aussie. So we have to analyze using 28 charts one currency at the time. Okay, so this amount of work, which is by the way doable by a person, requires anyway time and clarity of mind. Numbers and formulas are helping me to overcome this kind of zone of work and make me focus directly on the results for then making my technical and fundamental analysis based on currencies. But when I have to analyze 8 elements instead of 28, this is an oversimplification. And then, from my analysis, I rebuild the pairs that I want, because I know how to combine them, like everybody does. Okay, but not everybody has this kind of approach. But this approach is more effective. Okay, so I am analyzing, in this case, the dollar. For those who are asking me about what is your time, whatever, so today is the 26th of January 2019, so that you can check in your charts as well. So these are fresh data, and this I want to work with. So what we see here is the Friday, the 25th of January 2019, and I am working on charts that, for as regard the time, is GMT plus 2. Okay. So some of you they were asking me this. So this GMT plus 2, the chart, and I am in this case analyzing, making some examples on this Friday that has just finished. Okay. Fine. And so I am analyzing dollar finally. I am analyzing dollar through euro, CAD, and all the other 7 currencies that are in the market performance of the day. Okay. Of course, now I'm doing this on a specific moment in time, because when I'm trading, let me also do this so it's more clear. When I'm trading, now I am at the end of the day. So let's fix a time for when we do start the analysis. Okay, so it's also more clear that way. I am analyzing dollar, and at the same time, as I told you, you have to analyze all the other currencies with the same. So I will do this for dollar, okay, and then of course you do the math, is the same. But why for dollar? Dollar is anyway the currency on which that coupled with other currencies gives the majors. So everything is in terms of dollars first in the markets. Okay, so this gives us a double information. Gives us an information about dollar and gives us an information about any other currency related to the dollar. Okay. So we assume that we are having our analysis, let's see, at 8 o'clock. Okay. Let's make it yellow so it's more easy to read. And you can see the day, and so let's do this for all the charts as well. We're making the analysis at this moment. o'clock. 8 o'clock. Okay, so we are at 8 o'clock. We don't know what comes after yet. Okay, we're analyzing dollar first. Okay, so compared to euro, dollar here is weak because euro, dollar raised, so dollar has to be weak. Okay, compared to CAD, it was weak, it was falling. So somehow we can also assume that euro is strong somehow for the moment, and then CAD is strong also, because they can be both. Okay, but we assume that the dollar is weak here and also CAD is stronger than dollar. Swiss franc, the one that I didn't put. Okay, USD Swiss franc, USD is weak. Aussie USD somehow is rising, so USD weak. New Zealand dollar, US dollar somehow is rising, so USD weak. Here we pay attention later, okay? Yen, USD yen is weak everywhere, but in USD yen is strong. Oh, okay. That's a kind of thing that can suggest me that until this moment, yen is even weaker than dollar. And in this case, GBP, USD, GBP has raised up against dollar, so USD is weak. So I can assume that with 6 charts on 7 where USD is weak, and only one chart, the yen, on which USD is strong, you have to think that in the markets, if there is a buy, is because there's also a sell. You can buy if someone sells you, and you can sell if someone buys you. Okay? So of course there will be always a currency that related to another currency will move in the opposite direction. It's normal. But 6 on 7 means USD weak. Same thing, we have to do that for other charts, for other currencies. So we have to do the same for the euro, we have to do the same for the Aussie, for the Swiss franc, for the CAD, and determine which one is weak, which one is strong. And understand that the moment that we combine together this hypothetical setup, we put maybe, I don't know, 5 currency pairs on our trade, then we need to observe just one of them, because they are all coherent, and at the moment something goes on the other way, we have to recondition our trade, maybe closing our trade and opening the trade with the new setup. Here we see that at a certain point in the future it happened, and we will see in the charts that I will show you after this brief analysis, that yen got strong, or at least USD was weak, as well as in the other charts. But this assumption can come also by analyzing, let's see if I have it here, the yen, let's see if I have the yen. Oh no, this is all messed up. Okay, I'll show you also how to do that. Of course you do euro, yen. Let me just put back in the USD. because I had all this stuff on. So we have the USD, the Euro, Yen, the Dollar Yen, Swiss franc Yen, CAD Yen, I'm doing, yes, CAD Yen, and then New Zealand Dollar Yen, what is left, Aussie Yen, and GBP Yen. Okay, Yen, you can see here that here is weak because Euro is rising against Yen, and is weak also against Dollar. Is weak also Swiss franc, is weak also CAD, is weak against New Zealand Dollar. Aussie is weak, Yen against GBP is weak. Can you see also in the charts themselves that when you find some kind of coherency, here you can see how the fall depends on the fact that USD was really weak, and this was the turn on which was weaker than the weaker Yen. But this you can assume it by making your analysis not only from the moment that you start to watch the markets, but also, for example, on other points. So you can make a first check here in this area. And you are at this moment in time, then you make another check of the same currencies in this area. And maybe the movement that you see in this area regards the USD is different. You maybe see something different, or in the Yen. And this can be done more and more times. So we are having a hourly chart, and you have the trades that will last for hours, or at least for the day. Always close at the end of the day, because the setup is always different. And you risk to get the currencies that are ranging rather than the currencies that are trending. So maybe you do 20 pips instead of 100, 150, or sometimes 200 pips per chart. It has to be worth the effort of making all these analyses. But this is the way you analyze the market. So this is where you get the information on a single currency from the analysis of multiple currency pairs. And I hope this is clear for the questions that we were talking about. So how to analyze the market charts. You can maybe sometimes, I don't know, add some information about the volumes that can be useful, considering volumes are not very reliable, but they are a kind of information about the activity on a specific level of price or specific time. That can be the beginning of the London session, American session, the ending of the session as well of markets. So, but this is the simple analysis that you have to do daily. But it takes not that much, even if it takes some time, and even if you have to write down on paper what you think about US dollar, what you think about euro, and so on. And then you have the strong, the weak, and the weaker, and the weakest, and the uncertain, Because if you have 3 charts up and 3 charts down, that says that 3 charts are saying dollar is up and 3 charts are saying dollar is down, what do? You don't take dollar for that moment, because it's not kind of predictable or understandable. It's still ranging or helping ranging other crosses. Okay, so this is the way you determine the 8 currencies that are going to be analyzed. So here I also reply to the fact that there are some hours to trade which are trading hours of the market sessions, using a hourly, daily and weekly also for the analysis, because this example that I made can be done on all the time frames, but it is more effective on larger time frames. So you analyze the hourly, combine it to the daily, or the daily and the weekly, or a hourly, daily, weekly, with the same perspective. But if you have to trade in the day, you must give a look to the hour time frame, because you are getting the pips in hours. Very simple. I wouldn't go in lower than the 30 minutes anyway, to reduce the noise. Okay, and so I think that if you see numbers on expert advisors like UFO, or if you see some conceptual and visual analysis, they can combine the same together. In fact, and this is for the Excel fans of my videos, in fact this is what is occurring on that Friday. Actually today is the 26th, as you can see here, now we are 4/28, but this analysis comes out from the day 25th of January 2019 and this is the hour that actually was taken, the last data, fresh data for the analysis. So it's almost 10 minutes before the close of the market. So we can see the whole day is made on a 60 minutes chart, so 1 hour chart. So we can have here 24 hours. Okay. And this is basically the extra formulas that I do from the UFO on which I can determine what? Pardon. The enter and the exit strategy, which normally comes from the fundamental analysis about the news. What currency is strong, or what currencies has a high at that moment, and what currencies has a low in that moment. Currency, not currency pair, so no charts, currencies, because that tells me hey, you are in a very low price for the euro, and you are on a very high price for the dollar. They're gonna sell dollar, they're gonna buy euro. So hopefully, if you are at this peaks, what can you expect that the big hands, institution banks will do? Nothing, because it's also an algorithm that is self-contained, so they can probably follow the same principle, but they basically move the price toward a balance on where you have to sell dollars which are convenient to be sold because they are overpriced, and buy euro because it's underestimated. But when you see in the chart, you see exactly the opposite. So this is why you are completely distorted in your analysis, and this is why 90% of traders are losers, because all these kind of oscillations, these are oscillations of each currencies, and this is the market performance of the day. So again, a brief recap. To read these charts, I read them from right to left. So this is the present moment. You also see the same previous videos with other charting on Excel, and the principle is the same, because of data are in the cells vertically. So I have here the most recent data, which is the 0, and which is this point. So for every chart we read them from right to left. When we read the charts on MetaTrader, we read from left to right. Okay, but that is not a problem for me. I hope not even for you. Also, is something that makes me understand. And when I think right to left, I am analyzing currencies. When I think left to right, I am analyzing currency pairs. So here we have the last 3 hours of the movements that are happening, and these are the oscillations that come out from this market scenario. This is the market scenario of Friday, and then we have GBP 0.22, so 22 hours ago. In pink we have the yen, we have the euro in blue, yen is brown, USD in red, New Zealand dollar in black. Oh, let me tell you this way, so maybe you can have a vision. Let me do this way. This is the euro, okay, in blue. In red, the dollar. Makes sense from the beginning. Let me see if I can do a kind of trick. No, this is the dollar, okay, 24 hours ago and at the end of the market. So this is the end of a Friday, this is the beginning of the Friday. Dollar went down, was weak, but was stronger, remember, than yen. For a while, dollar was stronger than yen, then became weaker than yen. Okay. This is Swiss franc, CAD, GBP, Aussie, and New Zealand dollar. And even this can be very hard to predict, you know, because you don't know. Look at here. Here you have this fall down, that this cross up. So you can compare the charts by having the one that is above is strong than the one that is below, which is weak. And this is the first assumption that I go with the UFO. This is the UFO, basically, in terms of graph. What is the extension of the UFO is this. If you notice, no matter the kind of oscillation, this is oscillation for between a zero value of negative, which is the zero-sum game that is Forex. And these 8 charts come out from formulas on this chart, on this UFO number, so are the next formulas. Of course, below I have other graphs, but they are not important as this one, so let's magnify it a bit. Pardon, yeah, I'm right. Okay. These are, let's assume, waves. Okay, so no matter what, if I buy here, I do expect that before the price goes here or lower than here, these are normalized values, okay? So it goes up first. And when it goes up and it makes a peak, it will only go down. This is the oscillation. This is why we are having issues determining the strong and the weak, because look at the oscillation of the yen, New Zealand dollar, Aussie, GBP, euro, dollar, CAD, Swiss franc. They are not synchronized. So, which means that sometimes you have the peak of USD Swiss franc, other time in another moment you have a peak of New Zealand dollar and Aussie against euro together, and other times you have other peaks. In fact, these movements are the peaks that are combining together, for example, dollar and GBP, or the cross between Swiss franc and dollar. But how can I understand from this which one will be strong or weak? Of course, I see that Swiss franc is stronger than USD, and they're probably combining together, but USD is weaker. So I will keep my USD Swiss franc and sell. Let's see. USD Swiss franc. Right, even if I have a moment up, there's always a movement down. And this works for the analysis as I showed you here, but for me, I have the UFO, which basically is this. And then I have another fundamental analysis on currencies that tells me, let's make an example here. Here I have 28 hours, okay? So as usual, as you saw also in the previous video, if I am 20, let's make a point, 20 hours ago, okay, this doesn't work very well. Oh well, I may also, I magnified wrong. Okay, let's do this. Sorry, huh? Okay. Let's see. 12, 12, 12, 12. Okay. If I am 20 hours ago, what I see, here I am. 20 hours ago, I was having all this mess and nothing else after this, okay? I was having Aussie and New Zealand dollar rejected from this level of support. I was having yen going down. I was having USD that going down. Also, euro was seeming going down. So this is why also we have an analysis later. But and I had also GBP at the top, like stable or trending. So this is the first assumption, that maybe instead of 20, let's put 21, sorry, 19, so we can have also better of movement. But I see that Aussie is greater than New Zealand dollar, then Swiss franc is greater than dollar, that anyway euro, which is this one, was above Swiss franc and dollar, and also yen. So I can say, okay, euro is stronger than yen. Euro is stronger than yen. So this is the first approach. But then what I see, based on my calculations that provide me a kind of graphication of the oscillation of each currency, I see that at 20 I had this spike up of yen, which means sell, because at the top, when the spike is going here and it stops here, it means it has reached the maximum for that oscillation according to my formulas. So no matter if the spike goes here, of course if it's here it means more pips in future, but if it arrives at the point, then it's ended. So it has only to go down, because it's far away from the fair price of that instrument, from that currency, that they will sell it. Okay, it's about the value. This is the fair value in terms of, okay, we have a fair value of the yen, and we have to say 100 and something related to another currency. But if I tell you what is the fair value of the yen or the euro or the dollar, it's always one answer. It's zero, because I determine not the fair value as a number, but as a condition of stay flat, and a condition where there is no oscillation. That is the fair value. If something goes up compared to that level of zero, that is an overvalued situation or undervalued situation in the opposite way. So there is this difference, this differential, this delta, that anyway, when it's reached the peak, and if you notice, we have one peak up, and this is for every chart. One peak up. I expect from this that it's going down. Okay, this is not a peak down, but it's down. When it's down, I consider up, and it goes up. When it's up, and it stays still here, it's anyway up. So I will go down, and it's down. And here it stays. I need a down to go back to up. And this is the down where I buy, and here I sell, and here I buy, and here I sell, and here I buy. This is what they did in the markets Friday with the with the Japanese yen. And you can check the charts at this time, 24, 21 hours ago, from the end of the market session of Friday, 18, sorry, 8, 7, 6, 5, 3 hours, okay, and then up. So the end in the last 2 hours was rising, yen was getting strength, but for a very short movement. So 20 hours ago, I could have said, I'm going to sell yen, I'm going to sell Swiss franc. I don't know, I can buy CAD because I'm coming from this situation and I didn't got already something above the fair price, above the zero. But let's see others. I can surely say I buy New Zealand dollar, and I can also buy Aussie. And well, I don't know very well, because if it goes back, look, it goes back on the same level, so maybe I can buy here and then I have a retracement and then I have another retracement, but of course I will take profit here or here. So when it goes on the other side, okay, but if I buy here, even if I have a retracement, I don't need a lot of stop loss, right? If I buy here, I'm an idiot. I have to sell above and buy below, sell high, buy low, but high and low of the currencies, not of the currency pairs. This is the big misunderstanding. So let's see a couple of charts, and we check that we sell yen and we buy Aussie, so we buy Aussie yen and we buy New Zealand dollar yen, okay, 20 hours ago. And we can also think to buy Aussie US dollar, because I'm selling US dollar here, and also New Zealand dollar US dollar. So we buy Aussie and New Zealand dollar against USD and yen. Let's leave out Swiss franc, please, because it's, you know, there is no volatility that much here, even if there can be opportunities, but let's stay strict to this. We buy Aussie New Zealand dollar, we sell USD and yen. The sound of, so we buy Aussie US dollar. Okay, and the hour, sorry, in this case, let's put it clearly, is 20 hours ago, 19, 20, 20. This is 21, this is 20, okay. 20 is at 3 o'clock. Of course, it can be done also on another moment of time, so the moment that I am at that moment, very simple. And maybe there are already some moves that have been made or not, but we have to stay strict to what is the market doing, right? So we said Aussie US dollar and New Zealand dollar US dollar. Now let's get rid of something because we have only 4 charts, and then we have Aussie yen and New Zealand dollar yen. You may notice that I didn't watch any chart, I just analyzed this because I was here and I analyzed what was happening at that moment in terms of fair price, because from the movements of the currencies we can understand the moment we find the equilibrium between the values with formulas, with numbers, to then have a graphication, a charting that we can assume these parameters. So there were like 100 pips of movement here, 100, 100, and guess what? 100. Basing the filtering on that moment, I could have had that. So I also hope to have explained a bit what is about best hours to trade. It takes some time, but sometimes it's too late or sometimes it's too early, and markets will hurt you if you are too late or too early. And by having these concepts that I'm now analyzing, so the enter and exit strategy, I told you, the enter strategy is that when I perform consideration about I'm here and I see these assets that can be traded and filtered, because if I would have been here, for example, at this moment in time, so 13 hours ago, I would have had more activity of the GBP, maybe the dollar, of course the euro, and expecting that the yen was here and not yet arrived on the other side, also yen in sell. So selling yen 13 hours ago, selling yen, selling dollar, and buying GBP and buying euro. So euro USD, GBP USD, and euro yen, and GBP yen. Right, this time 13 hours ago from this moment, so 12, 13 here, which is at 11. Another good moment, maybe even better for this GBP yen. I would have made at least, here it was a lot, huh? GBP yen moved 111 pips. Okay, this is the GBP yen, GBP yen. This is the GBP USD, 140 pips. This is the Euro USD, 90 pips. And the Euro yen was 80 pips. Okay. This is the moment I see that these conditions are reversed. Let's say that I was trading here New Zealand dollar in buy. I can decide to exit the trade the moment I see I have New Zealand dollar to sell. Okay, that's the problem. So that's why you have to use larger time frames, because at least it lasts for 1 hour, and then you recombine the trading. But when I enter, I showed you, I enter not when, but with what assets. So at this hour was good for GBP. At this hour was good for yen and New Zealand dollar and Aussie. So this is the answer. And I exit when they are at the opposite, or when they are doing something like this. So I can stay in buy because US dollar is stronger than yen. But when I see this, and I see that 7 hours ago, here, there was this big spike up on selling dollar, and of buying, selling, buying, selling, buying, selling. This was buying anyway, 3 times. So that was the moment that US dollar, yen, from buy goes to sell. And you see that while the day is developing. So you have to constantly monitor the charts and make the assumptions I showed you. Do it more times in the day, and it can be somehow stressful or time consuming, but with some practice can be very easy, rather than do charts, modifications with trend lines or whatever. And you see that the concepts of trending line, or from high and low, or strength and weakness, they are perfectly matching this kind of charting, right? Okay, so finally, money management. What to say? You have to understand that you have a balance, and you have to risk a part of it. So what I suggest is to stay within the 2%. You can be with minus 3%, that's fine, but normally you have to stay below the 2%. So not less than minus 2%. But when you enter the trades, think that that is your stop loss, or somehow stop loss goes on equity. If you lose a total amount of, considering the currencies, the currency pairs that you're trading and the portfolio generated. So rather than put stop losses like price level, think in terms very simple. If I'm trading 0.1 lot, I expect that at maximum I can risk 50 units of my base currency, so euro, dollar, whatever you have the account with. That will make me out of the trade and reconsider to trade on another way. That is a global stop loss without stop loss information for the broker. And take profit is the same thing, but is in terms of exit strategy when the oscillation of the currencies will go in the opposite direction. So you don't have to determine that, you have to determine that the moment you see that occurs in the market. So with the peak in the opposite direction, overvalued compared to the fair price of the cross, or undervalued, so you buy it. And this takes some trading discipline, of course. Allow yourself to take the time to practice on a demo account and take a journal of your performances and ideas, and it's very useful, it's important, it's like you're going to school. You have to be disciplined, passionate, and have method that avoids you to go wasting energies and time. When you know exactly what you do, at least you analyze things with more accuracy and with more clarity. And if you have clarity, a clear vision of the markets, at least you can anyway reduce the risk. So the work that I showed you is also for reduce the risk, because when you have greater divergences in terms of magnitude of the currencies, you can expect the better results in terms of volatility in the right direction, so more probability to be right. At the end of a market, at 10 o'clock, what do? You quit, you close. Wellington session will come out from the new day. Then there will be the Asian session with also Tokyo. Let the information to develop for you for your daily trade analysis. Daily trade and daily analysis, of course. Okay, so probably you will have even more questions, I don't know. I hope this helped to clarify certain aspects regarding the approach to Forex trading, so that could represent some kind of basics on how to approach to the Forex market. And concluding, I thank you all for watching, for your interest, for subscribing, for supporting my project, for leaving comments, for sending me emails, for chatting on Skype. Some of you also, they do this. And to the next video, I don't know when I do that, but when I have some time. And I wish you, as usual, good space and good time.